Hey guys, this is Simon. Doing a quick minute, wanted to do a fast video here on how I use Fibonacci 50-60 retraces in my trading, and basically give some hints on ways that I use it not only to find trade location, but to also tell me that the market's likely to break down from a particular area, or when to avoid using it. Right. So before we get started, past performance is not indicative of future results, and this is for educational purposes only. Now we've gotten past the legal mumbo jumbo. So the first thing that I want to point out, and it's very, very critical that you be able to identify whether we're in a balanced market or a trending market, what type of market we have, and whether we're moving out of balance or into balance. And so this present chart has a great example of that. You'll see this is the oil market. This is going back to September 15th. You can see we built an awful lot of energy in a market like this. You can see at the tail end, the market starts to get tighter and tighter, and we've started, right? See how we have a triple top here, and then we finally push through to a higher low, right? And a higher high, and then we end up with a higher low as well. You can see that right when it starts to taper, it gets very tight right here at the end, right? So the first thing I'm going to do is when I see this higher low, I don't want to draw, or I don't want to trade a 50-60 retrace when we are inside of a range, because the 50-60 retrace tends to get swept, right? If I draw a 50-60 while we're in here, I'm going to continuously end up taking losses, right? But when I notice that we make a new high, right, outside of that consolidation, now my interest is peaked in using a 50-60 tool. So what I'm going to do is I'm going to come up here, grab my tool, draw from swing high to swing low, and you can see as a scalping tool, even though this closed slightly behind the 62 retrace, it did not close below the last swing low, and it certainly didn't break the swing low off to the left, right? So I would have preferred it not to close behind the I would have preferred it not to close behind the 62 retrace, but this wasn't too horrible, right? And then what you can see here, notice we're making higher lows all the way through here, and I'm going to make even a smaller draw. See how we push through to a new swing high over here, and this time on this swing high to this swing low right here, see how we're unable to close behind this 62 retrace from this small draw. What's happening is energy is building tighter and tighter, and this is giving me a clue that buyers are in control and we're about to have an upside break, right? So now, and that's exactly what we ended up getting. But remember, for my purposes, I'm purely a day trader. I'm inside the day, right? So we clearly break to the upside here. Now, I used the Fibonacci tool a little bit unconventionally. I'm going to take it from the break, the base of the break, to the swing high before there's a retrace. So I'm going to draw it just like this. I'm going to go from the base, and I'm going to drag it up to my swing high, and I'm now going to look for a 50-60 retrace. Now this is really, really important. When we get to this 50-60 retrace, I do not want to close behind the 62. If we close behind the 62 retrace, right, this rally's in trouble, and what you'll have ended up doing is trapping a bunch of sellers, which you'll see in just a moment, right? And then I'm going to consistently drag this all the way up because I want the base of this rally to hold all the way through. So I want to show this. Come over, grab this. Oh, didn't want to draw a new one. Just going to grab it. And I'm going to pull it up. And you can see once again that from the base of that rally, right? Most people are drawing it from back in here. I'm drawing from the base of the rally. We push right, first time we pushed into the 50, failed to hit the 62. Excuse me, first time we pushed right back to this was the 50 retrace. It's now been adjusted, and you can see we can hit the 62. But notice I'm not just drawing fibs, I'm also looking at the character of the market. Notice that this is the biggest downside rotation out of all these down rotations we've had since we've started this build to the upside. This is a change in character, right? And what I want to see immediately, right? So I'm concerned. Obviously my 62, 50, 60 holds, but notice how I can't make an impulse move. I would like to see, for health purposes, this market trade back to this 50 retrace. I know if I close behind this 62 retrace, the market's in trouble. Now watch as I advance this chart a little bit to the left. Now see that bar when it closes definitively behind my rally? If you couldn't tell it was over here, you know for certain it was over here. You want your stop floating somewhere behind this 62 retrace. If the market is strong and trending very strong, it will not pull behind that 62 the majority of the time. I'm not interested in any further retraces. By the time I get this bar over here, I'm very concerned about the roll to the downside. So now I want to show you something. As it pushes down, you'll see that it pushed into support, attempts to find support. And what am I looking for now? Well, the first thing I'm looking for is I'm going to drag this retrace from the beginning of this rally all the way down. I know that when I get, let me draw this. Let's go there, erase drawing. I'm going to go grab my drawing again. And I'm going to drag this thing all the way down because I know the first time that we get back to the 62 retrace here, right, I am hunting a short in this area from a day trading perspective, right? So I'm going to advance the chart just a little bit more. Okay, and you'll notice that we continue to push lower there, right? Now I want to come back over here, drag it a little bit further, right? Remember, I already know when we're down here, I'm searching for a short in this area. I'm looking for a short setup on a smaller time frame, right? But I have the confidence to know that when we get into that area, and you'll notice that we just missed. See how we just missed on that draw? Just by a couple of hairs. This is where I would have been looking for a short, and I don't mind that it didn't hit. I knew I had the right area to come into. And then also notice through here, what's happened? All of a sudden we were making lower lows and lower highs. We now have a higher low. So I want to see, right? I want to see if there's if this was a change in character, just like this was a change in character. So guess what I'm going to do? Take my tool and draw it up over here, right? And if this 62 retrace holds this time, and we make another new high, even though I still believe we'll get rejection out of this area, I'm going to become much less eager to press my short side, and I'm going to start to look to trade the higher lows back to the upside. So watch how that plays out between those 2 points. Okay, notice we come into that 62 retrace and we break again. So now I know I am not, right? I am not trying to catch, right? I'm not trying to catch a change in pace, and I still haven't hit my 50 retrace. So I'm going to come back over to my larger draw, grab it. Didn't mean to do that again. Very calmly. This is still the location I want short, right? Or I want to see higher lows and higher highs. Now see this when we're in this location here? Notice we've come right into the 50-60. Look how the market's responded, right? So from this area right here, right, I knew that from this point, which I'm going to draw it out, I'll give you the prices on it. Right, from this point, entry meaning being about 51 and all the way back to 51.40, this whole area, I knew this entire area provided me with opportunity, right, to get short for rotation down. Where did it come all the way down to so far? 50.16, right? So what I had to do was simply be prepared to find a way on a smaller time frame to look for shorts in this area, right? I want to say that again. I knew when we were down here that this area was going to be a prime shorting area. And if you look, right, again, what's happened? We've broken over our last consolidation area. So what do I want to see? For my safety net, I want from my base to my swing high, right? See how this squared off the positions between the two 50-60s, right? Now watch when you move to the right. Okay, see how this time we held our 50-60, right? Now I do not want to be short anymore, right? That was my primary target from 51 to 51.45. We pushed down into 50.20 towards 50, right? See right there, 50.20, 50.10 roughly, give or take. And now, right, notice the markets come back in. And notice this, see that close right there behind the 62 retrace? I want to do that one more time. See this close? I want an impulse move above this 62 retrace. If I get an impulse move above this 62 retrace, just like when we broke down off to the left on this bar, I know that we could extend significantly to the downside. If I can get an impulse move above that 62 retrace, I know I have a good chance of pushing towards 52.40 and retesting the old highs, right? And that brings us into current Friday. So, long story short, that's on a very large time frame, a 1 hour chart. But that's how I'm using my 50-60s, both to find location from a bigger perspective, look for structure within the market, and I'm using higher lows to help me get more aggressive when we get into those 50-60 areas. And of course, on my actual entries, I'm all the way down to a 10-minute chart or a 5-minute chart. I hope that helped. Give a little bit of perspective of how I use Fibonacci in my trading, guys, particularly the 50-60 retraces. So anyway, anyone's welcome to join us in the room. If you'd like to join us and see how we trade ES, NQ, and CL in real time, email me. Current email is tradeandperform@gmail.com. Looking forward to having you in the room, and I hope everyone trades well. Make lots of money, guys. Make sure you have a trade plan, you follow that trade plan, and you follow your risk plan. Have a great night, guys.